Hey everyone, this is Manny. I wanted to do another quick video today about mortgage rates. One of the questions that I get asked a lot is, where are mortgage rates going? What do I think the trends are? And what's going to happen in the future? Now, the easy answer to understanding mortgage rates and where they're going to go is to follow the 10-year treasury. That's usually what I tell people, and then I have to try to explain as to what that actually means. So if you go onto Google and you just Google 10-year treasury, you'll find the ticker symbol like TNX, and you can kind of take a look at that for yourself, and I'll show you too what that looks like. Now, why do mortgage rates follow the 10-year treasury? Well, what ends up happening is the mortgage-backed securities compete directly with the 10-year treasury. And what is a mortgage-backed security? So when a bank or a lender, they issue out mortgages on a property, later on they go ahead and they bundle up all these similar like mortgages, and then they sell them on the secondary market, and that's a mortgage-backed security. And those mortgage-backed securities compete directly with the 10-year treasury. Now, an easy way to think about it is, let's say somebody that they go to garage sales, right? And they buy these items, and then in order for them to recoup the cash that they put into buying those items, they then have to sell them on eBay or something like that. That's almost like the secondary market. And what it does is, the same way with banks, is when they issue out these mortgages, it ties up their funds, and then when they sell them off later, they then recoup their funds, and then they can issue out more mortgages, essentially. Let's see. Also with that, like, I know recently headline news has been, mortgage rates have topped 8%. Everybody's kind of freaking out about mortgage rates, but just keep in mind that that's specifically talking about certain mortgage products. It's talking more about conventional loans out there, and conventional loans as an average for the entire nation has topped 8%. But even when mortgage rates were at 8%, because of the various loan products out there, for example, when conventionals were above 8%, I was still pricing people out like at 7.125 for like a typical well-qualified VA borrower. So with that, let me show you kind of what alright, so let me show you a little bit about what I did. So like I was telling you, if you just go into Google and you type in 10-year treasury, and I mean, I do this almost every morning to kind of get an idea. The one I go to is Yahoo, and it just kind of shows me where the 10-year treasury is. And what that does is it kind of gives me an idea of what it's been doing over the last few days and kind of what to expect for the day. Now over here, I pulled up from Fred. You can look this stuff up, but there is two really good graphs to look at. One of them being, this is mortgage rates all the way back to June, and you can see mortgage rates themselves. They were, kind of dipped down, came back up, and they've been climbing with this nice little dip right here. And then over here, same thing. This is the 10-year treasury. You can see that they basically mirror each other very, very well. And I'd say that right around this point right now, with this little dip on a, like I said, well-qualified VA, we're under, I'd say right in here, we're about 6.75 plus or minus a quarter on VA loans. And I know when you come back to here, this time frame, or this is 22 February, in this time right here, there was a nice little dip right there. And I know that's the one time that I saw recently mortgage rates for a well-qualified VA borrower was going to be, I think we got just under 5%. It was like 4.875, and that was a nice dip. And so if you follow that dip right there, over here with this one, you'll see that it mirrors each other right in here. And then back here is when mortgage rates first started moving up, I'd say to their highest peak back, oh no, it would be up here, November of 22. That's the first time I saw mortgage rates kind of go above into the 6% for VAs and 7% for typical conventionals. And that mirrors same thing right over here, that October, November time frame. So just some considerations for you to think about, when you're ever trying to understand the trend in kind of mortgages and what they're doing. And overall, you can see in this entire graph, they've been climbing, but hopefully, because of what the Fed has said recently, they start their kind of decline into the future. Once again, reach out if you have any questions. I'm always here to answer, and I like talking mortgage-related things. If you have any questions about future home purchases that I can help you out with, give me a call.